Welcome to Module 9, Financial Management and Budgeting in Hospitality. Effective financial management is crucial to the success of any hospitality business. This module focuses on the principles and practices of financial management within the hospitality industry. Understanding the importance of budgeting, controlling costs, managing revenues, and analyzing financial performance is essential for maintaining a profitable operation. Hospitality businesses, whether they are hotels, resorts, restaurants, or event venues, need to balance the income from their services with the costs associated with running their operations. The hospitality industry faces unique financial challenges due to fluctuating customer demand, seasonal trends, and unpredictable external factors such as economic downturns or natural disasters. Financial management in hospitality requires not only traditional accounting practices but also the ability to forecast trends, adapt to changes in the market, and implement strategies that ensure profitability even during slow periods. This module covers the key elements of financial planning and management, including revenue management, cost control, financial reporting, and investment strategies. It also emphasizes the importance of financial forecasting and understanding key performance indicators, KPIs, to measure the success of financial strategies. Here's a breakdown. 1. Introduction to financial management in hospitality. The role of financial management. Financial management in hospitality involves managing the business's financial resources to ensure its profitability, growth, and sustainability. It includes budgeting, forecasting, analyzing costs, setting financial goals, and managing cash flow. Types of hospitality businesses. Financial management varies across different types of hospitality businesses, hotels, restaurants, event venues, etc., and each requires specific financial strategies. For example, a hotel must manage room occupancy rates, while a restaurant focuses on food and beverage costs and turnover rates. Financial planning and strategy. Developing a financial plan is essential for any hospitality business. This includes setting short-term and long-term financial goals, creating a detailed budget, and strategizing on how to achieve these goals. A solid financial strategy helps the business plan for growth, manage operational costs, and navigate economic challenges. 2. Revenue management. Our understanding revenue streams. Hospitality businesses generate revenue from multiple sources, including room bookings, food and beverage sales, events, spa services, and more. Effectively managing these diverse revenue streams is key to maximizing overall income. Dynamic pricing. Revenue management in hospitality often involves adjusting prices based on demand, seasonality, and competitor pricing. By using dynamic pricing, businesses can maximize their revenue potential during peak seasons and optimize occupancy during slower periods. Forecasting revenue. Accurate revenue forecasting is essential for making informed decisions. By analyzing historical data, current trends, and market conditions, managers can predict future revenue and adjust pricing strategies to meet financial goals. Revenue per available room, RevPAR. This key performance indicator, KPI, is used in the hotel industry to measure revenue generation. It helps evaluate how well a hotel is filling its rooms and how much revenue it is generating per available room. It is calculated by multiplying the average daily rate, the ADR, by the occupancy rate. 3. Cost control and expense management. Identifying fixed and variable costs. Fixed costs remain constant regardless of the level of business activity, such as rent, salaries, and insurance. Variable costs, on the other hand, fluctuate depending on the volume of business, such as food and beverage costs, utilities, and supplies. Understanding these costs is critical to managing profitability. Cost-cutting strategies. Effective cost control strategies help to maintain profitability without sacrificing service quality. Some common strategies include negotiating better prices with suppliers, optimizing staffing levels based on demand, and implementing energy-saving measures to reduce utility costs. Food and beverage cost control. In restaurants and hotels, food and beverage costs are a significant portion of total expenses. Managers must control portion sizes, manage inventory efficiently, and monitor ways to reduce these costs while maintaining quality and customer satisfaction. 4. Budgeting in hospitality. Creating an operating budget. The operating budget is a comprehensive financial plan for the business's daily operations. It includes estimates for revenue, operating expenses, capital expenditures, and profit margins. A well-prepared budget helps managers understand how much money is available for expenses and what financial goals they should aim for. Capital budgeting. Capital budgeting involves planning for long-term investments, such as purchasing new equipment, renovating facilities, or expanding the business. It requires a careful analysis of projected returns on investment, ROI, to ensure that these expenditures will contribute to the business's future profitability. Cash flow management. Maintaining a positive cash flow is essential for the day-to-day operation of any hospitality business. Proper cash flow management ensures that the business can pay its bills, reinvest in operations, and plan for future growth. 5. Financial reporting and analysis. Financial statements. Key financial statements in hospitality management include the income statement, profit and loss, the balance sheet, and the cash flow statement. These reports provide a snapshot of the business's financial health and performance. Income statement. The income statement shows the business's revenues, expenses, and profits over a specific period, usually monthly, quarterly, or annually. It helps managers understand how much money the business is making and where it is spending. Balance sheet. The balance sheet provides a snapshot of the business's assets, liabilities, and equity at a specific point in time. It is essential for evaluating the business's financial position and ability to meet its short-term and long-term obligations. Cash flow statement. The cash flow statement tracks the flow of cash in and out of the business. It helps managers understand how much cash the business has on hand to cover expenses, invest in operations, or pay off debt. 6. Key performance indicators, KPIs, for financial management. Profit margin. Profit margin measures the percentage of revenue that translates into profit. It is calculated by dividing net income by total revenue. A higher profit margin indicates that the business is more efficient at converting revenue into profit. Occupancy rate. This KPI measures the percentage of available rooms or units that are occupied by guests. It helps assess how well a hospitality business is attracting customers and maximizing its space usage. Average daily rate, ADR. ADR is a key KPI used in the hotel industry to measure the average revenue generated per room. It is calculated by dividing total room revenue by the number of rooms sold. Gross operating profit per available room, GOP. This KPI measures the profitability of a hotel's operations and is calculated by dividing gross operating profit by the number of available rooms. 7. Investing for growth and profitability. Investment strategies. Hospitality businesses must continually invest in their facilities, services, and technology to remain competitive. Investment strategies may include upgrading amenities, expanding facilities, or incorporating sustainable practices that attract environmentally conscious guests. Risk management in investment. Every investment carries some level of risk, and it is essential to assess the potential returns and risks before making financial commitments. Hospitality managers must evaluate market trends, the competitive landscape, and the financial health of their business before making significant investments. Diversifying revenue streams. To ensure long-term growth, hospitality businesses should consider diversifying their revenue streams. For example, a hotel might invest in offering event hosting services, or a restaurant may expand its menu to include delivery and takeout options. That will be it for this module. Take the quiz to continue to the next module. See you on the next module.